Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. This week's video will be summarizing the second week of November. Now, it's been another brutal one. So the portfolio at the end of last week was 135,377. And at the end of this week is 130,026. For a 3.9% loss, which equates to £5,350. So the week before, the portfolio was at £140,122. So that's a £10,000 drop in the last 2 weeks. And at the worst case last week, we were down almost £9,000. So pretty brutal week. But again, these are things that don't concern me really. They are going to be natural pullbacks within the market. If we just zoom out and look at the current year, we are still up over 12.3%. And that's what I kind of tend to do, is just zoom out and know that these are momentary dips within the market and the market usually recovers. So worst case, you do nothing and let these kind of dips just pass by and recover. Or the best case is that you are adding to your portfolio during these times in stocks that you believe in. And this is where the real wealth is created, when you're buying stocks at discounted prices. Again, if I zoom out further, as you can see, we had a big dip during the tariffs, and now we're having another big dip within the portfolio. But again, this will recover. So let's look at some of the reasons why this might be happening. Well, one of the reasons was that the government was shut down for a period and there was no data coming out regarding things like unemployment, which the market doesn't like uncertainty. So that's one of the reasons why I believe that a lot of people have sold off on stocks. And the other one is this. This is the probability of an additional rate cut in December. It's dropped to 44%. And at one period, it was really high. It was above the 70s. So that's maybe another reason why the market is a bit spooked. But as you see, there's still a strong likelihood that this rate cut will occur in January. So it might be that the market's taking a bit of a breather, but I still believe with the rate cut here that the market will still run up to the end of the year. So overall, we're still up over 30k. Now, actually, if we look at the overall performance of my portfolio in the last year, we're still up 12.3%. But if you look at my pie, it's actually up 22%. And the reason for that is that I have a few risk stocks within my portfolio that are not within the pie, because I want my pie to be as safe as possible for the people that copy it. And I have about close to 90 people that are copying this pie. So for the year, you should still be up. It's a very solid portfolio. So please keep adding if you can. I've run out of money for this month, so it's going to have to be for next month when I start adding again. But this is the drawbacks of having some high volatility stocks within your portfolio, that when the market does go down, then your portfolio does suffer. But as you can see, the pie is actually doing better than my current portfolio. But my current portfolio has stocks that I believe are still going to continue to do well, that are struggling right now. And those include things like IREN, BMNR, HIMS. All of these stocks are down quite a lot right now, but I believe they will recover strongly. Now, one piece of good news that did come at the end of the week after markets closed was this. Warren Buffett's Berkshire Hathaway reveals new position in Google. Berkshire disclosed a $4.3 billion stake in Google. This is really bullish for Google stock, because Berkshire Hathaway generally invests in company for the long term and things that it seems as fair value as well. This is one of their mantras. Now, people seeing this as a surprising move given Buffett's traditional value investing philosophy and reluctance towards high growth tech names. And Buffett previously admitted he blew it by failing to invest early in Google, even though he had insight into its advertising potential. Berkshire's auto insurance unit. Geico was an early customer of Google, paying the search engine $10 every time someone clicked on the ad at the time. I had seen the product work and I knew the kind of margins they had. This is what Buffett said in 2018. I didn't know enough about technology to know whether this really was the one that would stop the competitive race. So now this becomes Berkshire Hathaway's 10th biggest stock at $4.3 billion in value. So this is good news for the portfolio because Google is my biggest stock and it's something that I aggressively built over the last year as I thought it was undervalued too. And now it seems like Berkshire Hathaway, maybe not seeing it's undervalued, but now they're seeing it as something that should belong in the portfolio. Now, again, it's important to zoom out. So we zoomed out on my portfolio and we saw that we're still up over 70% since we started in April 2021. And it's generally been a reasonably smooth ride, but there are and there will be volatility within the markets, which you have to embrace as an investor. Now, if we look at previous historic crashes or at least turbulence within the market, every single time it's recovered, as you can see. And this will be no different. So the market will recover. It's just a case of being patient. And one of Buffett's sayings is, the stock market is a transfer of wealth from the impatient to the patient. So if you stay patient and you wait it out, you will see big gains within the portfolio. And this is what's going to happen for me as well. I have no doubt about that. Now, as you can imagine, from a week where you are down almost 4%, a lot of the portfolio will be red, as you can see. But it's interesting to see what stays green or what has stayed green during this volatility. So you've got Google at 1.5% up for the week. Apple up 1.62%. Carnival Cruise Lines up 0.14%. Costco, which seems like even from the volatility last week, is staying stable, which is quite unusual for a retail name. So maybe this is something that I could increase a position as there will be more volatility in 2026. This is what the market is expecting. There seems to be likely more volatility next year. So I will be trimming some of my positions when the next run occurs. And I will have a bit more cash on the sidelines. Unless opportunities like Meta, for example, a couple of weeks ago turn up, then I will be putting it in sooner. Microsoft and Nvidia are the other ones that were up for the week last week. So overall, the portfolio hasn't seen 2 weeks of such strong volatility and drawdown. But again, this is part of the investment journey. Now, if you're liking the visibility within the portfolio, then please, if you can, give the video a quick like. Subscribe to follow my journey to see if we do come out of this drawdown and go to all-time highs soon. And if you want more frequent updates on the portfolio, then I do make posts on my Substack, which is here. You can scan the QR code to join that. And when I do make sales or buys, I do updates as I do them on Substack. Now, going back to the portfolio, so Google is still my biggest holding and it still will be. And as you saw with the news of the Berkshire Hathaway stake, the market went up after hours, and I think will continue to do so, as normally happens when a company of Berkshire Hathaway's influence invests within a stock. So we should see that one going up soon. Still up on most of my positions, including Robinhood, Meta, Imperial, Microsoft, Visa, MasterCard. I think these ones will show their worth during volatile times as they are seen as more stable stocks. Nvidia still up over 75%, similar to Carnival. Tesla dropping a little bit as the whole market did, but still up almost 90%. Broadcom up 80%, Amazon up 25%. And then we got the big tranche of red that we're seeing, including companies like Oscar, IRN, Grab, BM&R, and HIMS. Again, all I think are solid stocks. HIMS was on the watch list, but I think they recently launched lab testing, which could be a game changer for their revenues. So we just have to see how that pans out. Then you got Centrica, Costco, Apple, ASML, KLA, all in the green. But again, tough times, but just if you can, add to your portfolio or do nothing and then let these times pass, and we should see market recovery soon. So thank you very much for joining me on this video, and I'll see you on the next one.